Hello, this is Sandra Cho with Point Wealth Capital Management, and today I'm going to be talking about September 2022. This month has been extremely volatile, like this entire year. As of this recording, September 21st, the S&P 500 is down 20.5%, the Dow is down 17%, and the NASDAQ is down a whopping almost 28.25%. Part of this volatility is inflation. We're just trying to get a grasp on it at this point, and the federal government has raised interest rates 0.75% today alone. So far this year, the FOMC, the Federal Open Market Committee, has raised interest rates a total of 3 full percentage points, bringing the Fed fund rate up to 3 to 3.25%. That has had a drag on the stock market in general, but not all stocks are created equal. Growth stocks have been dragged down even more than value stocks. Why is that? First of all, growth stocks have more debt, typically speaking, and they reinvest in the company more. Because they have more debt, as interest rates go up, they have to pay more to service their debt. So a company such as Amazon, who has done amazing last year, has gone down over 30% year to date. Meanwhile, you have a stock like Procter & Gamble, which is a value stock, and that's gone down about 17%. Part of that reason is because it's a value stock, and value stocks don't generally have as much debt. Likewise, Procter & Gamble pays a dividend of over 2.6%. So you're getting paid to wait until that stock price comes back up. And likewise, as mentioned, the stock does not have as much debt. So value stocks have definitely been more of a bellwether year to date, as has commodities. Commodities are actually up. And that's amazing considering that everything's down. US stocks, international stocks, both developed and emerging, as well as US bonds, which are down about 11.5% year to date. That's practically unheard of. Now we come to inflation. Inflation has been a huge headwind year to date. We're just trying to get a hold of inflation at this point, and that's why the FOMC has been raising interest rates. We do see glimmers of hope in inflation, and you can see that by gas prices, which have come down in the last few months. Housing has softened, and even rental, the cost of rent has gone down as well. But inflation is still high, and you can see that in food prices. Gas is still quite high, and the labor market is so strong, which is generally a good thing. We don't want employment to be high, but there might be no other way, because we do have to get a grip on inflation, and that is definitely a concern. Only time will tell whether we have a soft landing, a hard landing, or a landing that just is prolonged over years. Thank you so much for your time, and I look forward to seeing you on the next monthly recap.